Hey, what's going on, everybody? Welcome back to this week's weekend prep and review. So, starting this video off, we're going to talk about how things went last week. So, last week I made a total of 10 trades, and if you've paid attention to these weekend prep and reviews, last week I was using an Excel spreadsheet. I went back to TraderVue. It's just easier to maintain instead of using the PowerPoint and then the Excel. So came back over here. If you're interested in using TraderVue, I've never used it before. Feel free to ask me any questions in the comment section below. I will answer it. Sorry, I will answer it honestly and truthfully. There's also a link I'll put in the description below if you want to get $10 off your first month, and you could try it out that way. All right, so getting started. So overall, August is pretty much gone. I won't say it was my best month, but total, I believe I am up a little over $1,600 for the month. Not my greatest month, but it's definitely better than having a red month. And this week that we just had, see if this thing will let me do what I'm trying to do. Okay, sorry, yeah, this week right here, this last week we had, I was able to make up quite a few losses that I had, especially from my big loss right here where a stock gapped against me. But for the week, I am up, let's see, 1,438, which ain't too bad. And like I said, a total of 10 trades and 3 losers and 7 winners. So overall, a 70% win rate. So that's not too bad. I'm happy with that. And I'll go over the trades I made. I even made an impulse trade, and I hate doing those, but sometimes they happen. I entered an impulse trade, and then I was feeling tired and whatnot and got out, but I will discuss that whenever I get to the trade. All right, so let's go ahead and start and dig in to see what happened for the week. All right, so Monday, as you can tell, Monday I don't do very well on Monday, but here we go. All right, so I closed my fast trade from last week. If you don't remember what that was, so I was trading the 2-minute squeeze, or sorry, the 2-hour squeeze. You see these early in signals, it looks like obviously like a consolidation pattern. You could see that it's, so you have that, it's going that, you just went for the breakout, and I was targeting the 1272, but I ended up stopping out and taking a loss. The reason for stopping out, so see, that was my first target, it's consolidating, EMAs are stacked positive, got a squeeze, I'm looking for it to shoot up, and then, so these are just ATRs. Here's the daily. It obviously looks very good. Everything is stacked very positive up top. And it obviously looks good now, but when I stopped out, I actually had to take the screenshot today because apparently I didn't do it the day. So I'm very strict when it comes to following my rules. And in this case, I was playing the 2-hour squeeze. I got out on, I believe, this candle, something like that. It obviously broke the the 49 level-ish. But the reason I stopped out is because the momentum shifted negative. And with the momentum shifting negative, you never know. Sure, it's a long shot back up, but there are times when it doesn't do that, and then the squeeze fires short and it goes further down. So I entered the trade based on the 2-hour. I'm going to get out based on the 2-hour. So follow my rules, and I believe I was only risking $200, and then I got out for $122 loss. So overall, not too bad. I'll take it. I'm more happy that I was strict on my rules. Well, probably back to here. See, I was stopped out of this EA trade. Once again, I was going to look to play the 2-hour squeeze in the next week, so I entered an 11 days to expiration, 140 bull put for 132. And as it says down here, it was priced near the 21 EMA there, and it just crossed positive over here in the 30-minute. Everything's looking good up top on the daily. Moving average is going higher. It's consolidating. Right here on the 2-hour, 1 hour, and 30-minute. Stack positive with a squeeze. Momentum above zero right here. Maybe better if I do this. Alright, and then the 1 hour, it looks like it's going to shift to go higher. Then right here, it's also shifting to go higher, so everything was looking like it was going to continue on higher, right? Alright, so once again, I stopped out. Alright, so like it says right here, although the daily chart still looks okay, the setup I was playing was a 2-hour chart, and the squeeze shifted negative. And I gave it 4 hours for it to show a shift positive, and it didn't, so therefore I stopped out for a small loss. Still looks good, I'm sure. Actually, if I scroll down, it is actually higher. Let's see. No, it's kind of going back down, so it was a good stop out nonetheless. But the point is, as I was trading the 2-hour, I entered on the 2-hour. The 2-hour changes, I get out. But as you can tell by looking at all this, maybe I should stop trading the 2-hour chart, because I tend, or it seems to get shaken out so much. I think all my stop outs were based off a 2-hour chart. And so that is frustrating. All right, and Lockheed Martin, I entered this trade on this day as well. Well, this one obviously closed, so I could go through the whole trade. So I entered a 4 days to expiration, 393.85 bull put for $1.40 of credit, and you can say I closed it for 80% of the credit received, which resulted in being $231 when I was risking only $150. This was a very clean setup. It was a bull pullback to the 21 EMA, and it closed with a hammer candle right here. So that's my attention. I noticed it on this candle right here. Now the day of entry, the 2134s were crossing positive right here, shooting up higher through the fib levels. The 2-hour squeeze, there was a 2-hour squeeze once again right here, looking like it was going to shift higher, like it did on this side right here. Just getting blue momentum on the 1 hour, and the 30-minute has been blue. Let's see, early end signals. All right, but yeah, so no complaints on this one. It was a relatively easy trade. We'll go here where it shows my entries. If you're not aware, so right here on those triangles shows the day I entered, and this is the day I exited. So I only held the position for a few days. The position worked out well, and something I need to do more regularly, and I may subconsciously be doing it, but I need to acknowledge it more, is where once momentum shifts higher on the 1 hour and the 2 hour is just starting to do it, then I could look for a better entry, because I think there are times where I'm entering a position on the other one, but the other side's going short, and I'm getting shaken out. Oh, dang it, I keep doing that. But that is something I should definitely pay more attention to, and something I want to work on the upcoming week, because it's the only way you get better, right? All right, Tuesday. I closed that EA trade that I talked about earlier. Pretty sure Okay, yeah, I did tell you all that. Just confirming. All right, Caterpillar. This was a targeted butterfly I entered last week. I entered these last week. So, just for a quick recap, It was 10 days. Target to me, a targeted butterfly is see if I can make it bigger. Well, that's not very good. Okay, so price is pulling down here. The channel's obviously going higher. Always want to target the 145 area, and that's when you do out of the money butterfly, to where you can really capitalize on the movement and still put theta decay in your favor. So anyways, what's going up? Everything's looking good. I ended up closing it for only $184. Could have been more, but I did once though it started doing this. Once it wicked up higher, then came back down. I was going to let this winner become a loser, especially with the expiration being so close. I went ahead and took the small win, though hindsight's always easier to see. Like, oh, it did go up, but there's no guarantee that's going to happen. It could have closed right here and then just drifted back down, and then that would have been a loss. So I'm happy with the performance on that one. All right, got stopped out of TTD. Once again, another 2-hour stop out. I think. Actually, let me relook at it. No, this was just this is a clear stop out. I got a small winner, only $50. It was a 4-day DT for, it was 465, 460 for 250. So a clean 1-to-1. So this is, I entered on this candle, gapped up, things were looking great, but momentum shifted negative. That means this candle is starting to go down, or sorry, the momentum starting to shift lower. And once I saw that, I decided to go ahead and close it. Especially right here, you see the blue dots. Those are 50% above average volume coming in on the down move. And it's kind of funny. I got out literally at the dead bottom. Like if you look at it, all it did was test the 21 EMA and boop, right back up. But it wasn't looking like that was going to happen. And my rules are, if the parameters change, go ahead and stop out. At this point, it was already down 2%. So, and it filled this gap as well. So I took the small winner, moved on. All right, I got a hedge right now, the SPX. So this is a 14 days to expiration butterfly. Basically meaning you take advantage of theta, and I'm looking for a move down. So I have the body of my butterfly down here. So if we keep going up and say we pull back some, then I will make profit. So it only cost me $3.50 to get in, and it's just a hedge for my overall positions. And then monster, I got shaken out of this one as well. Oops, I need to edit this. This was a stop out. All right, so I entered on, so it looks like a very clean ascending triangle, right? Just like the other videos I have. I entered on this little head fake. We got all these dots are early in signals saying it's about to fire, but whenever it pulled down, I didn't like how it was reacting at this 84 level. And honestly, I was too cautious on it. I believe I even wrote about it. Yeah, see, hindsight's always 20/20, but it was moving fine, but I got cautious due to the market feeling overextended. I was more worried that I was going to turn over and taking a loss. And it was still looking good, but and also the momentum, this is another reason I got out as well, is so you see, so the momentum right there is dark blue, right? Actually, let me get a smaller pen there. So these ones are light blue, right? That means momentum shifting higher. But where the early in signal started coming in, all these dots, so that's meaning that it's about to fire. But the dark blue means momentum is decreasing as well. So to me, I was reading that as it may also turn around and go down. But nonetheless, It was a small winner, 20 bucks. And I keep doing that. I apologize. Come on. Alright, so that's all those ones. Alright, Netflix and Microsoft. These are both targeted butterflies as well that I entered last week. Netflix made a heck of a run, right? But I will go over what happened here. So as your typical pullback to the 2134 EMAs, there is a squeeze. I'll show that here in a minute. You can see it's bouncing off this level right here. So I entered a butterfly targeting 510. So what I was wanting is price to go up and kind of linger in this area. And that's how you will make money on a butterfly. I will produce more videos that explain that later, but that was what I was looking for. Right here, this red line, that is my upper break-even line. So here's the day that it fired. So all week, price, so these, actually I should say this part. So these yellow or orange lines-ish, those are my break-even lines. So all week I've been pretty much outside of it. And then the day opens and goes boom, goes up. And then you see, once again, these 50% volume dots. And then, so we're right here at my target. What I want it to do is linger in this area so I make a bigger profit. But since I saw all this volume coming in, I was like, okay, I'm just going to take the winner. I made about 89% return on it. And luckily I did, because it just went, wow, this isn't even all of it. I'm sure if you're actively trading, I'm sure you're completely aware of it. Like my break even was near 525. So it went through both of my break-even points. It went all the way up to almost 550. So that wouldn't have been very good. So that was a good little quick close on my end. Same with Microsoft. A butterfly. Once again, I was targeting this 100% retracement up top. And then I cruised up to it and I scaled out. Same thing as Netflix. I won't make this video too long, but that is the idea. But if you have any questions, please write it down in the comment section below, and I will go back and I will answer you or whatever. I just don't want to bore everyone with the same old trades. All right, well, here, we'll start at the top. All right, so I did enter a 1 day day sale expiration bear call spread. So typically, if you don't know, price stays within the Bollinger Bands. Right now, price is way outside the Bollinger Bands. There was a double top right here. I entered it on the 5-minute chart. On the 2-hour, momentum is starting to shift slowly, or start to go slow. And we are way outside the the 3 ATR move. This is the average right here, and it is way outside. Typically, we pull back in. So I was thinking we're going to get below 349 going into Friday. But once so we dipped down, we kept on going up, and you can see that it was forming this consolidation pattern where it looks like it was going to break out, which it did. And then at this part, in this area right here where I got out, was where the 21 and 34 EMAs on the 5-minute chart crossed positive. So I said, okay, I took it for a small 30% winner. And good thing I did, because it broke out and kept going. So I already went over the Lockheed Martin trade. Told you I closed it for 80%. Went over the Musk trade and went over the TDD trade. All right, so that's good. I think the only thing that's left is my screw up on Friday, my impulse trades. So I'll go over T-Doc here in a minute. All right, impulse trade. So what happened here? Why is there so much down here at the bottom? Down here. So first of all, I wanted to do a 1-day DT to trade a 30-minute chart. Well, I got a phone call, I answered the phone, and as I'm entering the trade, I was talking to the person and I chose the wrong expiration dates. So I ended up getting out of that for a loss. And then whenever I entered the August 28th one's the one I wanted, the 1 DTE expiration, I ended up, I was feeling tired. I was thinking that I chose the wrong expiration because it wasn't, I didn't feel that the momentum was going to be there. And so I was like, I just went ahead and closed it, took the loss, combined on both trades. It was obviously minus $125. And so yeah, it was impulse trade. And I consider impulse trade something I didn't plan for prior to the open. I tend to trade my best whenever I see a stock or a setup that I plan prior and I just focus on that. If I see something intraday, I tend to do the worst on those. And so I mark those down as impulse trades so I can mark them down and make sure I don't do them again. Now, things I feel I can improve on is I should honestly stay away from the 2-hour chart, just trading that alone. It seems like daily, obviously, the daily is the most effective. So that's probably what I want to focus on more. All right, so that's how the performance went last week. Like I said, if you have any questions, go ahead and ask down below. And now we'll go ahead and prep for next week. All right, so here's the S&P 500 index. As you can see, it is very extended. So we broke out from right here and have been going up since then. And this white, the dotted lines are EMAs down here. So the white dotted line is my 21 EMA and the magenta one is my 34 EMA. You see that we're very far away. We just hit 3,500. Me personally, going into the next week, I am going to be somewhat cautious. I want to wait to see what happens. I want to see a pullback, basically. I mean, yes, it is going higher, but I'm kind of at the point where it can kind of go without me because at this point, it's almost chasing. And once I do feel that we get a pullback, it's going to cause a knee-jerk reaction, and that we may go down. I'm not saying it's going to be a huge pullback or a huge crash. I just think it's going to go down fast because it's going to hit a lot of stop orders, and people will be very knee-jerky because everybody's very cautious right now. And we're, like I said, outside the Bollinger Band as well. So I'm looking for a pullback. That is basically what I want. So there's the SPX. I guess I could do the NDX since I looked at that as well. Same things, just going higher. So I want to pull back. So this is my main plan. This is what I want right here. Pull this up. This is what I want to watch for. So you see right here where the candles are dark blue, and we got the momentum down right there, and we kind of just went sideways. What I'm looking for is I want to see a dark blue candle form a 1 or 2, and this down here start to turn dark blue, and then I want us to go sideways. That's what I'm looking for or expecting. Now, since I'm expecting sideways, I literally only have one stock I'm watching right now, and I'll still scan every day, but my main plan right now is Lululemon. So right now I'm currently eyeballing an iron condor expiring next week. And it'll be the 392.50, 397.50, 360, and 355. All that's within the expected move. The break-evens for that trade are actually these red lines, and just expected to chop around for 5 days before we get to earnings. And that's what I'm kind of looking for. A sideways movement into earnings is what I'm expecting. But I want to see that first sign of momentum decreasing on the SPX. Other than that, I guess I'll just be watching it move without me, because once I get in, that's when the little dip will happen. That's literally all I am watching for. But we could go ahead into sectors. These are the main sectors I'm looking at. So my favorites right now are industrials. You see, industrials were doing pretty bad, but they are getting some volume on the up moves. And we closed at the high in that last candle, looking like we just broke above this little triangle. I'm expecting higher prices on industrial, so I'm going to keep an eye out for setups in the industrial sector. I also like materials, also closed at the high. Also closed at the high right there. And once again, kind of a little wedge-ish thing going on there. And I also have, what was it? We did materials, industrials, and my last one is consumer staples. Oh, no, that's discretionary. Alright, consumer staples, look at that. This one is just cruising higher. Oops, let's not do that. Alright. It's cruising higher. Once again, close at the high. And I would like to see it continue higher, but I will just be keeping an eye out for that one. And to keep things hedged, the only sector I see that look like you could short is obviously utilities and energy. Those have just been beat up forever, and those are also defensive sectors. I don't like to short those because the second the rotation switches, then those also jump up because they're defensive. So I don't like to short those. But I will say biotech is looking weak to me. If not weak, definitely sideways. So the VWAP is stacked negative, and this level is kind of holding it. The moving averages look like they're as if they're going to start going down. Well, let's see here if I can draw this straight. If it could break this level, I think this would be a good short down. So I want to watch for that. Other than that, I'll just be watching it. Alright, so I guess that's all I have. If you have any questions, like I said, please write in the comment section below. If you found this video helpful, like it, subscribe, tell your friends, and I guess that's about it. Y'all guys enjoy your weekend, and I'll see you on the next one.